and use the lower range as your exit. But when price comes here, you can scale out like you can already take out up to 70% when we're in here, right in here. Can you see what even happened when we mitigated that position here?
Mm-hmm.
So let's take it to weekly. So on the weekly, it's not really, it just looks like a wicks. But on the daily, you can now see that there was a major retracement after with that weekly inefficiency. And look, now imagine if you were on a trade from here, you were on a buy from down here. So let's say this was a weekly inefficiency. So you're basically going to use a 1 hour break of structure. So let me just use this to make it easy. Now you basically want to use the 1 hour break of structure on this. And this is your 1 hour high. So I'll make this a different color, purple. And then I'll just need to make this a lighter color because, yeah, I think it's better this way, right?
Mm-hmm.
So now this is the overall 1 hour high, 1 hour low. This wasn't a break of structure, it was a complex break. So this is where we had the break of structure. So let me mark that out because this was where we saw a candle closure here. You can see the candle closure.
Mm-hmm.
Now, your first entry is down here. Your entry here, stop loss this low, add a few extra pips below. And your overall take profit is the green line here. Now, there's no guarantee that price is going to tap here. So that is the reason why we have this red line, which is the equilibrium, this green line, which is the weekly inefficiency, and then this is overall take profit. So once we hit this level, you want to pay yourself at least 25%. Once we hit this level, so remember that this is now in this case, well, let me see. This red line is equilibrium. So let's see how much you would have made at that equilibrium. 1.85. Now, this case, I wouldn't really recommend that you take 50% from this equilibrium. Now, the reason I wouldn't recommend is entirely up to you at the end of the day, but the reason is because this trade hasn't really done much. It needs to do at least a 1:2 or more for
Mm-hmm.
take 50% from equilibrium. So if it hasn't done up to 50%, or what am I saying? If it hasn't done up to 1:2 or more, taking 50% this early will cut down the volume of your profits massively. So in this kind of scenario, the best thing would be to take at least 25% from this equilibrium. Then here, when we hit this level, then you can take another between 25% again, and then leave the rest to hit the take profits. Now, if it doesn't hit take profit, you've already paid yourself 50% because 25% here and 25% here is 50%. So even if the trade reverses on you and takes your stop, you still made 50% profit.